Well, that was a disaster earnings call for Tesla. I mean, it was not good to say the least, if I'm being honest. And you guys know I'm not a pumper. I was saying I didn't think the numbers were going to be all that great at all this quarter for Tesla in our earnings preview. So I have to be honest with you guys once again. This earnings gave Wall Street the perfect setup to completely screw Tesla. So I'll give you the reasons why and what they will try. And we will have a special guest analyst on at the end to give his take on these earnings as well that you completely don't want to miss. And I have no idea how he's going to take these earnings at all, so it could be wild. So this might be a little bit brutal for some of you guys, but hopefully you appreciate the honesty, so at least click the like button if you like that. So Tesla had a bad earnings call all the way around. I mean, Tesla had some bad ones in the past. I agree completely, but this may be one of the worst. It's probably not the worst one ever, but it's definitely one of the worst ones in recent memory. But there was a big plus to this one, and it was the first time I can remember Elon not using Elon-style timelines. Now, what I mean by that is normal Elon timelines he gives go something like this. Basically, he says something like, we can get this done in 6 months. But the actual reality is it's going to take 6 years. He didn't do that this time at all. He basically backed off a lot of that talk and really gave us some very truthful answers and very realistic answers for the first time in a long time. And I honestly was shocked and very happy about it. I know that makes some of you guys mad when I point out his ridiculous timelines and some of the other stuff like that. But I do that because I know they hurt the stock itself when they don't get there. And at times it makes for some unrealistic bullish arguments that seem to be everywhere that are not even realistic in the first place. And then some make investment decisions based on those crazy arguments. It kind of sets up for situations like when Tesla was at $400 a share and everyone was saying buy the stock now and ignore the PE of over 1,000 because FSD will bring hundreds of billions of dollars next year because it's here now. And of course, Cybertruck's going to bring $100 billion plus next year as well, and kind of so on and so forth. All the while, you're ignoring the fact that, well, those may or may not be true, and the PE was over 1,000. Now, obviously, FSD and Cybertruck still aren't here several years later, and are still actually probably years away from really producing anything significant to the bottom line. So hopefully some of the ridiculously bullish narratives around Tesla can die, just like the ridiculous bear narratives, a lot of those have died as well, so we can get down to really evaluating Tesla on its own merits, which are incredible. I agree they're incredible all by itself, without everyone trying to outproject each other to the point where Tesla bull even sounds reasonable with some of these projections. Tesla is great all on its own, and we don't need ultra bullish narratives for that stock to be great and for the company to be great long term. But unfortunately, that also means that Wall Street now has the truth on the timelines for Optimus, Cybertruck, and the 50% CAGR isn't going to happen consistently long term either. And that doesn't bode well, as we will discuss in just a second. And I can't even point to the numbers and say they were great for the quarter either. I mean, we all knew margins were going to get compressed more, but I don't think we had them compressing this much. A lot of the kind of big price target projections are based on massive margins every year for the next 5 to 7 years. And obviously those projections are now completely busted. But their margins aren't what really concern me at all, as I didn't have my valuation based on some of those high, super high margin levels. For me, they are well within where they need to be and still allow Tesla to print money unlike every other automaker out there. And obviously not printing as much as before. Combine that with regulatory credits going up and spending going up, further hurting margins, and all this kind of lays the foundation for Wall Street to try and keep Tesla down and completely screw with us as investors. And there are 3 main reasons for that, and the last one could be devastating for Tesla stock, unfortunately. So reason number 1 is Wall Street is still not sold on Tesla itself, nor Elon. Like it or not everyone is sold on where Tesla is going, what they are trying to accomplish, and what it will do for the share price ultimately. You also have many large investors that don't like Elon nor his antics and would prefer a more button-up approach to running a company. And all you got to do is just look at all the Twitter drama to see an example of what institutional investors absolutely hate in a CEO. Now, we all know Tesla would not be where it is if Elon was not being Elon, but this call, unfortunately, was just a disaster. He rambled on about nothing, dodged questions, complained a whole lot, and quite frankly, was unfocused and unprepared. Now, kind of like we discussed earlier on the plus side, I was happy he gave a realistic timeline for Cybertruck as opposed to sticking with his usual overpromise and underdelivered tactic that he usually uses. Same with Optimus. Last year, it was going to be here this year, And now he said he hopes it can do more than yoga in a few years. So again, much more realistic of a timeline. Although I loved it because finally we are getting realistic timelines to base investing decisions on, unfortunately, Wall Street is going to punish Tesla stock for it. And that is the price you pay when you finally come clean per se and stop overpromising and kind of give us closer to the truth. So the second reason is because he finally acknowledged that the slowdown will hit Tesla just like it hits the auto industry hard anytime there's an economic slowdown. And everyone who in the past said that Tesla isn't going to slow down much, if at all, has now heard it from the horse's mouth that it is affecting them and will continue to affect them as the slowdown continues. Now, don't yell at me about this. Don't get angry at me. But for now, many view Tesla as a car company, and we cannot just dismiss that position altogether when the cars make up the vast majority of the revenue. Now, clearly they are still better than everyone else and next level on all kinds of things, but when dealing with Wall Street, they look kind of very macro at times like this, and Elon just confirmed for them that at least for now, they are cyclical just like the rest of the auto manufacturers are. And finally, we have the earnings call itself and the numbers. Here's the problem with these earnings, which were not great at all. There has been kind of a doom and gloom about the earnings recession or the earnings crash, which just hasn't happened once again. I mean, basically, we heard it was coming last quarter until it didn't happen, and same for the quarter before and the quarter before and the quarter before. Which, of course, in true YouTube fashion or media fashion, they just kind of say something like, well, it didn't happen this quarter, but wait until next quarter. Well, it's next quarter, and earnings so far have been honestly kind of great. And obviously, despite a lot of headwinds, we're seeing a lot of top and bottom line beats. We're seeing strong guidance, or at least maintaining guidance. And the banks all across the board said that consumer and businesses are still strong and well positioned. And oh, by the way, they had great earnings as well. But that is where the problem is for Tesla, because their past couple of earnings have not been great. Unfortunately, the past couple of quarters have really lent a lot of credence to Wall Street's point that Tesla is getting hit hard just like the rest of auto manufacturers, even if the reasons why are completely different for Tesla versus those automakers, and obviously it's different in regards to how Tesla handles it versus those other automakers. Unfortunately, that is the setup where Wall Street just loves to pummel a stock and send a stock right back down. If you weren't buying in the 100s like we were, and instead kind of bought the rally up to almost 300, that can be a very unnerving position to be in as they start to beat the stock down more and more and more. Well, the truth is, this should excite you if you're a long-term investor. Basically, despite all the problems, despite all the headwinds and everything else, Tesla is still executing. They're still obviously very profitable and has a pristine financial balance sheet and income statement and everything else. And you're starting to get really good pricing on Tesla once again. This is the exact scenario every long-term investor wants with every stock that they want to own long-term. And that would be an extended period of time of performance by the company, but the stock price basically stays flat, or in this case, goes down. And then you have even more time to add shares. This happens all the time in the stock market with large companies, small companies, and everything else in between. And the longer it goes, the bigger the slingshot is when it finally runs. And it will eventually run, guys. And then you're going to actually have more shares than you would have had if it just ran up a lot earlier, kind of maintained the same, or, just kind of continued on its continual march. Just kind of think back to those that bought in 2017, 2018, or even earlier. They saw signs all over the place that this was going to be a beast at some point in time, but the stock price didn't reflect that. And they got the benefit of that rubber band being pulled so tight that not only did Tesla run, but it ran up big. And if you were kind of adding that whole 6-year period while it was down and flat, they also had far more shares than they normally would have had, allowing them to build far more wealth than if the stock had just, basically not traded flat for that 6 years and had a nice gradual run up. This is why I just buy and hold and take advantage every time Wall Street gets stupid and sends Tesla back down to prices that at my buy price target. But I know you guys are tired of listening to me. Let's hear from our guest analyst, the Tesla Bull.
There's a dark conspiracy going down right now. Notice how this earnings call was just a third world dial-in from a rotary phone. No visual confirmation. Answers making no sense. Confusion, frustration, and bearishness from Elon himself. That's right, you guessed it. The bears kidnapped Elon and put an imposter in his place. How else can you explain all this stuttering of answers, the ridiculous bearish takes from Elon himself, and the bad sound coming from the phone call? It's like when you're out at the club with 5 supermodels and my main girlfriend calls me. Trust me, I have a button that I push that makes it sound like a lot of interference, just like that call was, so she doesn't know I'm out with supermodels, just like the masses were fooled that was actually Elon. Trust me, it works. I'm an expert at this.
So guess what? The real earnings are out there somewhere,
And I'm going to track them down and release them myself so Wall Street gets their heads out of their butts
and pushes Tesla to $1 million per share because I'm the Tesla bull.
I'm a Tesla bull. I'm a Tesla bull.